Hello and welcome to the Financial Weekly Report. I decided I may just do the podcast weekly or every few days instead of every day. That way I could push more content into these videos instead of just uploading multiple 10-minute episodes. I also made this past week a video about the power of making food at home. Be sure to check it out. I'll put a link in the description below. And that video did pretty well, so I'll probably make more educational content in the future on this channel. Anyway, there is a lot I want to talk about, so with that said, this coming week in earnings is banking week. We have JP Morgan Chase, my bad, Citigroup, Wells Fargo, and PNC earnings all on the same day, which is Friday the 15th. We also have other financial services as well, like Charles Schwab, having their earnings as well. Heading into the week, it appears that Citigroup and Wells Fargo has the highest implied volatility. If you are looking to make theta gang plays with the banks for IV crush opportunity, it would probably be Citigroup and Wells Fargo. But it won't be that much of an IV crush. The implied volatility is only sitting around 40%, which that is the boring thing about bank earnings, is that they tend to not move as much, so IV crush plays are kind of inefficient if you're looking to scalp some premium. Another interesting earnings that is coming up is Delta Airlines, and their IV is sitting around 50%, and their earnings is on January 12th, which is this Tuesday. So there will be some potential there because I do not see Delta moving this much for earnings, because I think everyone has pretty low expectations for airlines at this point, where a lot of the scenarios have already been priced in. And one final company to keep an eye out for this coming week is the earnings. For earnings is Carnival. Their earnings is on Monday the 11th, and they have the highest implied volatility at around 70%. This is probably your best option for IV crush to scalp some premium if you're looking to write contracts this week during earnings. Plus, Carnival has a lot of growth potential for when cruises make a comeback. So let's say you sold a put and got assigned, then it won't be the end of the world because you could just start willing the company over time by selling covered calls. Not only that, they're still paying a crazy high dividend, so getting assigned probably won't be the end of the world as we continue to recover from the government-mandated lockdowns. But other than that, that is all of the important companies this week for earnings, so it's nothing too big, but it'll be interesting to see nonetheless. With that said, some plays I made this week include selling a put credit spread on the SPY twice to make a quick $19 in total. I saw the dips for the 2 days, and I saw no reason for a dip to happen, so I just wrote some put credit spreads for some quick cash. Also coming into this week, I figured that gold would be a strong play because of all the money creation and inflation that has been happening, especially with the $600 stimulus checks adding even more liquidity into the markets. So I wrote safe put credit spreads on Spider's Gold Index, which is a ticker symbol GLD, and I made $30 off of that after I closed on the contracts. And I'm still willing the Rocket Mortgage, or Rocket Companies, which is the ticker symbol RKT. So I sold a covered call last week and I closed at $20 profit. And I then sold another covered call this week for $50 worth of premium, $54 worth of premium, my bad. So we will see what happens next week. If my shares of Rocket get called away, it won't be the end of the world because my dollar average for Rocket is now below $19 and I sold a 2050 call. So getting assigned won't be the worst thing to happen. It is basically a win-win play. One thing that I learned is that I'm closing out of my covered calls and cash covered puts too early. I did some math and I figured out I would actually be making more money if I let the contracts get closer to expiration rather than closing early and writing a contract over into next week. This is because theta won't affect the contract 2 weeks out as much as while Theta absolutely destroys the contract that expires this Friday. Usually this tends to be a $6 difference in profit. I could have made... I'm sorry. Usually this tends to be a $6 difference in profit I could have made, and $6 is $6, so I really can't pass that up. Sometimes I close early just to gain more premium from a further out contract so I could buy the dip on my favorite companies like Coca-Cola. Coca-Cola went down a lot this week because of a decade-long IRS dispute, but I still love the company. They have a great marketing team and a great product, so I obviously bought the dip to the point where now Coca-Cola is my largest holding in my portfolio, next to Realty Income and Rocket Mortgage. This also serves as a reminder that I keep all my Theta Gang plays open to the public. I have an account over at thetagang.com, and I will link my account in the description below. I write notes down for all my plays so you can see exactly what I'm thinking, and I encourage you guys to do the same. In further financial news, the markets are way up. The S&P 500 is at all-time highs. The Dow Jones is at all-time highs. And it's not because of the reason you might think. It is not because markets are expecting an amazing economy from Biden. It is because this explosion upwards is because of an implosion downwards in the dollar. Many people are now fleeing the dollar, especially after the Senate results came out, because investors are finally starting to realize that the days of America's strength and the glory of the dollar is soon coming to an end. With higher inflation from government spending, people are now looking for hedges that is not the dollar. This is probably another reason why Bitcoin also broke record highs, as well as investors continue to flee the dollar. The Dollar Dixie Index continues to tank downwards as inflation is being priced in. But investors haven't even begun to think of the increased regulations and taxes that are coming. If they thought about that, we would not only see the dollar tank, but we would also see domestic stocks tank as well. This will more than likely be one of the things that will blindside many retail investors in the future when the markets suddenly collapse and is unable to grow back due to stagflation and a sovereign debt crisis. We can only inflate so much until that happens. And the thing is, interest rates are not going to go back up anytime soon. Bank stocks took off this week because the 10-year yield went up from 40 basis points to 105 basis points, which means people think interest rates will be back at 1% so the banks can make money again, but that is not going to happen. No politician wants to raise interest rates because they know it will bring a massive crash in the markets, which will ruin their optics and any chances of them winning an election. So the banks will still be unable to make any money. The 10-year yield is still relatively low compared to what it used to be. And I believe that once the markets see this coming, the permanently low interest rates, the high taxes, and the increased regulations, we will not only see stagflation and massive layoffs, but we may see banks begin to fail. And this time, the Federal Reserve won't bail them out. This is perhaps why the Federal Reserve is preparing the Fed coin to introduce to the public, so when the dollar does fail, which it will, then a new currency will come in and take its place. So we may see a future where a lot of the public banks go out of business and there will be an even more centralized banking system than we see now. And again, this is all a part of the Great Reset that the World Economic Forum is talking about, and again, it is a binary outcome. There are going to be winners and there are going to be losers. This will be a big wealth transfer from the poor middle class to the rich people and those who have been prepared ahead of time. Furthermore, the Senate election went over to the Democrats, and when you think about it, this is one of the dangers of democracy, because the Democrats decided to bribe the voter with $2,000 checks. They basically took their multi-billion-dollar lobbying money and spent that to advertise, saying something along the lines of, if you vote Democrat, you get $2,000. If you vote Republican, you get nothing. And many of the swing voters in Georgia believe that and voted Democrat, and this is unfortunately the exact same way on how Rome and Greece fell. This is why the founding fathers built this country on the foundation of a constitutional republic and not a democracy. But that has been spat in the face a long time ago. Politicians can just bribe and lie to the naive voter to gain power. And the Democrats are promising big government this time around. Trump pushed the Republican Party to the left with his fiscal policy, which gave the excuse for Democrats to be pushed even further to the left. And trust me, you are going to get the size of government that you wouldn't even believe existed. It's something that this country has never seen before. And the poor and middle class will pay for it in taxes, they will pay for it in their freedoms, and they will pay for it in inflation as well. The whole tax the rich thing is never going to work. There will be over 1,000 pages of loopholes for it. It is just a false promise made to voters. And the people will learn that there is no such thing as a free lunch. Throughout history, taxes on the rich never collected the amount of money projected. This is why the taxes are always pushed down on the poor and middle class. Now let me repeat that. Taxes on the wealthy never collect the amount of money that the tax is projected to collect. This is why the taxes are always pushed down to the poor and middle class. A great example of this is the income tax. Back then, in the early 1900s, the income tax was meant to be only for the rich and no one else. It was a promise made by the politicians at the time that the poor and middle class would never have to worry about the income tax. Well, now we are in 2021, and who do you guess pays the income tax now? It's the poor and middle class. The exact same thing is going to happen here. And let's say that doesn't happen. Well, the tax still isn't going to collect the money needed, so the poor and middle class will have to pay in the form of inflation due to money printing. And because the debt is now to the point where it is so high, we will never see interest rates increase again. And this is where the stagflation will come in. The banks will do massive layoffs. Businesses will do massive layoffs. Prices will surge to levels never seen before, and this country will break down, just like Greece and just like Rome. They always said that Satan is the master of deceit and that the pathway to hell is paved on good intentions. And this is going to be an example of that. So I guess we will see what happens and if the Fed coin is going to work. Then that way only the poor and destitute will be doomed because they will not have the technology needed. Again, the outcome is winners and losers, nothing more and nothing less. Furthermore, the Democrats have made no secret in their plans to abolish the Electoral College. They say it's undemocratic, which it is. That is the whole point of the Electoral College, to prevent this country from becoming a democracy. This country was built to be a republic, because if it is a total democracy, then that means this country's future would be decided by the populous states, and in this case it would be California and New York, while other states, the smaller states, are going to get left behind. The Founding Fathers knew this very well, that being a democracy would only lead to mob rule and will enable politicians to become even more corrupt. That is why the Founding Fathers made this country a republic. It is literally in the Pledge of Allegiance. I pledge allegiance to the flag of the United States of America and to the republic for which it stands. So that'll be an interesting development we will see in the future as America's economic health declines. And not only since we're going to have a fully democratic government, they have made it very clear that they want a $15 minimum wage, which is going to only serve to price out the low-skill workers. So if you're a low-skill worker who could only produce $10 worth of productivity, legally speaking, a company cannot hire you for $15 an hour if you only produce $10 an hour worth of productivity. And basically, a lot of people say, oh, we're going to stick it to the corporations. The corporations are going to make people pay their employees $15 an hour. No, they don't have to pay anyone. They don't have to employ anyone. And that's exactly what's going to happen. Low-skill workers are going to be priced out. Legally speaking, what Joe Biden is saying and the Democrats, that with no knowledge and no skill, you have to be able to produce at least $15 worth an hour of production, or else you cannot be hired. All right. So that way, a lot of the low-skill workers are going to be priced out of the workplace. It's only going to lead to more poverty, more decline. And not only that, if every single company has to move up to the $15 minimum wage, we would see prices increase even more than we have already been seeing. It's going to be way worse, especially with all the money printing and inflation that's happening. We are going to see a decline in this country like we have never seen before, and you need to get prepared right now. You need to get out of the overpriced American stocks. You need to get into gold. You need to get into foreign stocks, because it is going to go downhill from now. We have till 2030 until this country is going to completely collapse in on itself. Anyway, I guess this wraps up today's talk. Thank you for listening, and please like and subscribe for more content. Thank you.